Gold is approaching a major liquidity zone where smart money is preparing their next move. My primary focus for today's explainer is a precise sell setup above key liquidity. But there's one specific condition that has to happen first before we can pull the trigger.
Most retail traders are looking at the wrong levels right now. Let me show you what institutions are actually targeting. Our overarching directional bias on the 4-hour chart is firmly bearish. The primary draw on liquidity is the sell-side liquidity pool resting cleanly at 4030.00. That is the institutional magnet.
Before we dissect the mechanics, here's the exact outcome you need to understand for today's trading plan. The bias remains bearish. The primary sell zone we're monitoring sits up in a premium array between 4085.00 and 4092.00, targeting that 4030.00 level.
4030.00. Keep that exact number in your mind. This level is the ultimate draw on liquidity for the session, simply because that's where the vast majority of retail stop losses are clustered right now. Now, to drive price into those pools, the algorithm needs a catalyst. Today, that catalyst is high-impact USD data, specifically unemployment claims hitting during the New York kill zone. Remember, high-impact news doesn't change the trend. It routinely acts as the algorithmic driver to rapidly deliver price into predefined institutional liquidity pools.
So now that you know the target and the catalyst, we need to unpack the fundamental why behind this bearish bias by analyzing the higher time frame order flow. When we look at the daily and H4 structure side by side, they both confirm a massive distribution cycle. Notice how price recently expanded heavily to the downside, aggressively breaking key structural swing lows and sweeping external liquidity. The dominant footprint here is heavily bearish. Institutional supply is controlling this market from a premium.
But here is where the trap is set. On the 1-hour chart, we see a recent upward movement. Retail traders interpret this as a trend reversal. Institutions, however, interpret this as a corrective phase. It's deliberately engineered to tap into premium institutional supply before the sell-side program resumes. This brings us to a critical concept: liquidity engineering. Smart money is systematically building internal buy-side liquidity in the short term. They're creating relative equal highs to induce retail buying. Why? Because institutions need willing buyers to absorb their massive sell orders. It's a harsh reality of market mechanics, but they are systematically securing better, premium prices at the retail trader's expense.
And what's pulling price higher to create these buyers? An unmitigated H4 fair value gap resting exactly between 4090 and 4110. This specific premium array acts as an absolute magnet, pulling price upwards to fill structural imbalances before the true institutional sell-off can happen.
Understanding the logic is only half the battle. Let's shift strictly to the execution mechanics. Entering blindly without specific institutional confirmation is retail behavior, and honestly, it will cost you.
Looking at the M15 chart right now, with price hovering around 4067, the current action plan is a strict wait. There is no trade yet. Why? Because the smart money confirmation hasn't appeared. We're still in a discount array relative to the intraday dealing range.
Here's the exact step-by-step trigger sequence required during the New York kill zone to validate this entry. First, as outlined here, we must see a precise M15 sweep of the buy-side liquidity resting at 4888. Second, we require aggressive downward displacement that creates a market structure shift. Third, only then do we enter on the newly formed M15 fair value gap left behind by that displacement.
If those strict conditions are met, these are the precision trade parameters you'll want to record. The entry zone will be between 4085 and 4092. The stop loss goes structurally above at 4106. Take profit 1 is at 4050 to scale out, and the final target is that external liquidity at 4030. This blueprint yields a highly favorable 1 to 4.5 risk-to-reward ratio.
Let me really emphasize the 410600 level. This is your absolute invalidation point. If we see a clean, higher time frame body close above 4106, the bearish market structure narrative is entirely destroyed. At that point, the order flow shifts and we cancel the setup completely.
This is where the analysis becomes absolutely crucial. Did you know that the vast majority of day traders get stopped out right before the real move actually happens? Let me outline the exact scenario where the crowd will be liquidated today, because the market is actively sending a warning signal that most are ignoring.
Look at this stark contrast in perspective mapped out here.
Retail traders are looking at these immediate bullish candles on the hourly chart, hastily calling a breakout and eagerly buying the bounce. Conversely, institutions view this exact same price action methodically as an opportunity to engineer liquidity directly into a premium fair value gap trap.
As the New York news release approaches, this is the volatility sweep scenario you need to anticipate. Expect a rapid pre-news climb to induce early buyers. Then, a violent wick upward to sweep the 4088 high. This effectively traps breakout buyers and stops out early sellers. Once that liquidity is grabbed, expect rapid displacement lower to begin the real move.
Let's rapidly lock in the overarching plan and the absolute key takeaways for today's session.
The primary higher timeframe bias is firmly bearish. The highest probability direction is to sell, but only from a premium array. The ultimate liquidity target is 4030.00. And your immediate action right now is to wait for that M15 market structure shift confirmation.
If you value this type of calm, precise, institutional-style market analysis using ICT and smart money concepts, take a moment to subscribe to ICT Market Theory.
And as a helpful resource for those of you looking for a reliable environment to execute and trade alongside these exact setups, you can find the FXTM account link provided in the pinned comment below.
I'll leave you with this final thought as we approach the New York session. When the news algorithm triggers today, will you have the patience to position yourself alongside the institutions, or will your premature stop loss simply become the liquidity that fuels their move? Manage your risk, wait for your confirmation, and execute with precision.